from your position as head of strategy at Copper, just stepping back, I mean, where are we in terms of the institutionalization of the crypto asset class, if you like? Is this still very early stage, or and what from the sort of ground up, what sort of challenges does it pose to the market infrastructure, do you think?
It's an excellent question, and it's it's really good to sometimes zoom out from like the day-to-day of the space and really take stock, i.e., where are we in this whole development. And honestly, I still think we are pretty early in the institutionalization of the space. It's still an emerging asset class. There are still kind of battling opinions and debates as to how it needs to be structured, how it needs to be regulated, and these are all kind of questions that sort of institutions expect clarity on. Overall, it presents enormous opportunities. It presents enormous opportunities in terms of offering a new enabling technology that I believe will ultimately make our capital markets, financial markets smarter, more efficient, a lot more accessible, fit for the digital age. It's a massive opportunity because it's not just one asset class. It presents possibly an explosion of different asset classes that people are going to uncover over the next few years. Because it's essentially digital assets, they're software. They can be programmed to kind of fulfill any sort of function or purpose that people need. So the overarching theme here is opportunity. And that's why there is so much interest. And it's drawing increasing number of institutions for all sorts of different reasons. However, we're still early and we're seeing kind of multiple kind of risks plaguing the space and preventing some of these institutions from properly coming in and playing in this space. And it's really a mix. It's from operational risks, having to deal with multiple new technologies, having to deal with new types of assets that require very specialized handling, counterparty risk, because there are a lot of new counterparties that don't necessarily have the same pedigree like the counterparties they're used to dealing with on the traditional side. And last but not least, what we discussed in the panel, incredible fragmentation, both in terms of liquidity, also in terms of technologies. And that presents a challenge, for any one firm that wishes to engage in the space. However, I should caveat that this space moves incredibly quickly, and we're seeing sort of all these sort of challenges worked on full steam, and things are evolving by the minute, by the hour, by the day. There are a lot of people who compare sort of traditional space and crypto like human years and dog years.
Yeah, exactly.
It's things develop in lightning speed.
Yeah, I think the sort of 7x accelerator factor in crypto is certainly a genuine thing. And what of all those do you think are the sort of biggest underlying impediments, if you like, or sort of stumbling blocks that could get in the way of the growth of institutional adoption and engagement in the space?
Yeah, I think it's it's first of all the sort of still nascent infrastructure that exists in the space, and as we said, the counterparty risk, the operational risks that exist in the space. So for you to kind of manage any digital asset, you need kind of very strong footing in both technology, but also in security. And for a lot of sort of asset managers, this is an uncharted territory. And you heard Paul in the panel. This sort of notion that you can just wake up one morning and see the liquidity venue that holds your assets having stopped withdrawals or being hacked is just not a risk that people are prepared to kind of take en masse. So I think before kind of we see the next leg of growth from here, we'll need to kind of see the infrastructure and the market structure evolve to a stage where some of these risks can be at least better controlled. You can never eliminate them, but what you need is the capability to better control them. And I definitely think that companies like Copper, especially providers like Copper, are part of the solution and are kind of constantly innovating to be able to create that more palatable structure.
And from a regulatory point of view, I know obviously you touched on this in the last panel, and the next panel will do so again. But how do you sort of foresee that happening? I mean, is it possible that it could result in some sort of completely inappropriate regulation, heavy-handed, it sort of stifles the innovation that's going on, or do you think there's generally now a sort of desire to kind of embrace and facilitate what's happening here?
Yeah, I think the risk of kind of too heavy regulation that stifles innovation is definitely there. You're seeing different, I guess, authorities and regulators across the world react differently to the developments. What's really important is for the regulators to actually learn to kind of deal with the pace of innovation that occurs in the space, and try to understand the underlying principles. Because it's completely, I believe it requires a completely different approach to the way you regulate traditional markets. I think the practice of developing sort of safe areas for innovation, like we can call it some, for example, in the UK, has a very good tradition of doing that. After the financial crisis, that led to the whole development of fintech in the UK, and London being known as one of the fintech capitals of the world. That's incredibly important, I think, for this space. Yes, kind of put in place the necessary safeguards to protect especially the retail part of the market, but at the same time, leave plenty of wiggle room for innovation to continue to occur. Because we're now just getting into this phase where we're going to see the most interesting developments in the space, where you see traditional players partnering with these new emerging technologies to actually come up with a completely new, different service models, products that can already be seen in kind of the DeFi space. It can already be seen in large companies like PayPal facilitating transactions in cryptocurrencies, and it will be seen in sort of governments starting to roll out and test digital currencies as well.
Yeah, and what pretty much all the big banks are now sort of actively looking at getting involved in the digital assets crypto world, as you say. I mean, what does that mean for the development of the market generally, and for specialist players like yourselves? I mean, is it a challenge for a firm like Copper, or is it an opportunity?
Yeah, that's a question we get quite often. It's really interesting. I mean, by now, I think that's not even a debate that much. Maybe it was a debate back in 2017-18, whether who's going to win in that race. But what really happened in the market was in 2017, when kind of the first sort of real kind of strong bull market in the space, crypto really was on the radar of major institutions. But unfortunately, that sort of hype overshoot, and it was short-lived. And what followed was a crypto winter. And during that time, most of the big institutions really kind of lost the impetus and interest to actually expose themselves to the space, because it does come with a lot of risks, the less reputational risks.
Yeah.
And then what we're seeing now in the past year is gradually sort of institutional investors, the buy side, actually coming into the space, as I said, for different reasons, but the main one being that offers a lot of return opportunities and alpha, when alpha in the traditional markets is difficult to come by. And what you're seeing is all of these sort of institutional providers, they turn around to their large service providers, the big banks, and say, what can you offer in that regard? And all the big banks have been somewhat kind of slow to come up with a solution. So at this point, the only viable and kind of short-term route to market for them is really to partner with some of the specialist providers, at least on the technology side. And quite rightly, I don't think some of the big banks, big custodians would ever take the risk to use a third party for the custody of assets, but they can quite legitimately license the technology and enable themselves to offer these. What the impact it has on providers like Copper then is, we enable someone else who has, let's say, much bigger balance, much more credible sort of name in the market to offer some of that. But also, on the other hand, we have a partner that we can include in our, for example, clearing network that creates better network effects, that gives more credibility to our sort of infrastructure in the space. And when it comes to Copper, I can tell you that a lot of the large financial institutions that we're speaking with are really relieved to see that there is something like clear loop, Copper's clearing and settlement network in the market, because it allows them to kind of start operating without having to necessarily face some of the kind of different counterparties that they can't gain confidence in that easy. So all in all, I think it's not kind of us versus them. It's us working together to actually advance this space and build the next sort of chapter together.
Yeah. So I mean, in many cases, I guess you've been sort of ahead of the sort of institutional curve here, and you've been putting sort of some of the kind of plumbing in place that's necessary for when these more institutional sort of bigger players arrive. I'm just looking at Copper itself. I mean, you've just completed pretty significant capital raising, Series B funding. You've obviously got a lot of growth, big ambitions, and so on. I mean, what kind of new products and innovations are you looking at? What might we see in the future from Copper?
Yeah, so we are working very hard to continue and provide the best possible service to any institution wishing to enter the digital assets arena, right? And this starts with a sort of a very safe and secure custody offering, but then grows into providing connectivity to all these sort of exchanges and liquidity venues, and doing it in a way that resembles the traditional market structure, resembles the structures that people are used to seeing in their day-to-day, with kind of all the protections that come with that. Of course, we need to constantly sort of evolve to stay ahead of the curve on even all the technologies that are emerging within the crypto space. The things are developing. It's really with a breakneck speed. So you need to kind of all the time keep an eye on the market and try to facilitate the breadth of coverage that a lot of these sort of institutions need or will need in the future. So one of the kind of things that we're continuing to evolve is our sort of margin funding capability, the ability to connect to the different DeFi protocols in a safe, secure, and controlled way. Our staking capabilities, the ability to act or to exercise governance on tokens that allow you to do so. And on the other hand, we're constantly sort of anticipating this convergence of crypto and traditional finance. Because personally, I don't think tokenization of traditional assets is that further into the future. Like we're seeing more and more experimentation in the space, and I do believe the infrastructure, the technologies that we're building at Copper will ultimately become fundamental to running sort of that tokenized security on blockchain. And therefore, we're constantly kind of in conversation with some of the largest institutions, traditional institutions on that front.
And when you talk about, as you were earlier, and also alluded to on the panel, about a sort of degree of convergence and bridging taking place between crypto market structures and those in traditional markets, if you were a betting man, what would you say those would be? What do you think has come out of the kind of crypto world, whether it's 24/7 trading or DeFi, whatever, that can be applied elsewhere?
So there is a lot of quick wins and low-hanging fruit that could be essentially extracted by shifting some of the sort of systems that capital markets are based on onto a sort of blockchain-based system or some sort of distributed database system. Purely because there is a lot of manual reconciliation. All the big banks, they have massive mid and back office departments. Same with asset managers that are working constantly to patch errors within the way traditional kind of messaging systems work, or kind of the Swift system, by sort of starting to use some of these new rails that are actually can work at the same speed as the internet does. You essentially are allowing to do away with some of these constant reconciliation processes. Things like immediate settlement, and just improving the state of the infrastructure overall.
Very interesting. Well, I'm afraid we're going to have to call it a day there, Asen. And well, after back-to-back sessions, you probably deserved to take a breather now. But it's been really interesting talking to you, and I know Copper are doing some very interesting stuff, and a lot of market participants, very much behind what you've been doing, and I'm sure will continue to do in the future. So, good luck with all of that, and thank you very much for your time.